Good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to be talking about 2 to 8 unit mixed use property after we go through our live rates. Give us a moment here to go live on all the different platforms. Appreciate everybody tuning in nice and early. We got the chat up on the screen there. Feel free to drop a comment there in the chat as you tune in. Hope everybody has been having a great week so far. Great topic here to go over today. Excited to get into it. So it looks like we're live on all the platforms. So we'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as we go through the presentation here today. We'd be more than happy to answer any questions. But we'll go ahead and get it started here. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every morning at 11 a.m. Eastern on this show is go through our actual live mortgage rates, and then we do a deep dive into a different loan type. And today we're going to be talking about 2 to 8 unit mixed use properties, which is definitely popular right now, especially because we deal with a lot of investors here at the Mortgage Calculator. So Jose will take us through some different options we have for that here shortly. But before we do that, we'll do what we do every morning, which is check out the rates. So Nick, if you're ready, let's go ahead and pull up the live rates to see what they look like today.
All right. So not much change since yesterday. Today is July 18th, just after 11 a.m. So all of our standard programs have their initial rates here for today. So we'll set up a standard scenario and compare the APR across the programs. If you'd like a full itemized loan estimate that breaks down all the fees in the APR, please get with our team members. We have over 300 loan officers to help you out. For the demos, we use an estimated purchase price of $500,000, estimated loan of $400,000. That's 80% loan to value, 20% down payment, standard single family home, 760 estimated credit score, and an estimated 40% debt to income ratio. So those are our settings here. Let me go ahead and share my screen. And we'll check out the rates today. So first up is our 30-year fixed conventional for a primary. This is the most common loan that most people think of when they're thinking of a mortgage. Rates today, pretty much the same as yesterday, 6.375 rate, final APR 6.697. Now, if our customer doesn't qualify for conventional, typically the next option we want to compare is an FHA option. FHA allows more leniency on credit issues, as well as a higher debt to income ratio. It does require upfront and yearly mortgage insurance. Rates today at 5.625. Final APR comes in 6.569. And if we compare those side by side, FHA might be a touch cheaper for our customer that qualifies for both, but does require that mortgage insurance. For our customers that need to use it, definitely a great option. Very comparable here to conventional. And our customers that are eligible for VA. VA is only for our eligible active service members and veterans. If you are eligible, amazing programs here. Today comes in at 5.75 rate, final APR 6.055. And if we're comparing those to the other programs, VA is obviously favorable. So anybody that is eligible, definitely recommend to take advantage. And our final standard option is a USDA option. USDA is only for properties that are in USDA eligible areas, the rural areas of the country. If our customer is eligible and our property is eligible, this is a good option to consider. Rates today come in at 5.75 with all the fees included. APR comes in at 6.5. So usually our customer is going to be comparing our USDA option to an FHA option. USDA is going to beat it by a touch here and beat conventional as well. So for those areas that are eligible, definitely an option to consider. Now, if our customer doesn't qualify for these options, many banks or lenders will have to deny them, but we have over 5,000 total programs, which we can start looking at. So first up here is our non-QM alt doc for a primary home. So this would be for someone that doesn't qualify for conventional, FHA, etc., needs to use alternative docs. Our options here include bank statements, 1099s, asset related, all kinds of different versions we have. This option here is most likely a bank statement program, 6.75 rate. Final APR comes in at 7.067. So notice we're just a touch above conventional here within about a half a point to use alternative docs, which is amazing for our customers that need to use it. Very comparable pricing here. And now we'll move on to investment properties. So for our investors out there, tons of flexibility when we get into our non-QM. First up, our non-QM alt doc which would be a bank statement or similar. Comes in today at 7.25 rate, final APR 7.595. And we'll compare that to our other investment options. Next up is our conventional option. Remember, there are no government programs that are eligible for investment, so no USDA, VA, or FHA, but we do have our standard conventional option coming in today at 7.125 rate, final APR 7.482, beating the alt doc by a touch, but not beating our DSCR, our favorite program. Definitely recommend all of our investors check these out. DSCR stands for debt service coverage ratio, no income, no employment needed. Simply use the estimated rents on the appraisal to determine a DSCR ratio. The estimated rents can cover the expenses, aka the property will cash flow. That's a ratio of 1 or higher, which is preferred. For all these demos, I put a ratio of 1.5 so we can see all our programs. First up is our 3-year prepayment penalty option, which is a pretty standard option for DSCR. Rates today come in at 6.75, final APR 7.093, which is blowing conventional out of the water here. And we can sweeten the deal even more with a 5-year prepayment penalty. Rates come in at 6.5, final APR 6.823 to improve it even more. And we do have an option for no prepayment penalty. Some states do not allow it, and some investors do not want it. No problem. Rates today for that come in at 7.375, final APR 7.710. So it's a touch above conventional, but most of our investors still prefer the DSCR option. And if they can add a prepayment penalty, definitely gets even better. And the final two options, we had a deep dive episode on this the other day, are fixed rate second mortgages. So many customers have a low rate first mortgage, but still need some cash out. Don't want to touch that first mortgage, no problem. Don't need a HELOC. We have our fixed rate second mortgages coming in at a little bit lower rate than the HELOCs and not variable. So for a primary home, to get cash out using these non-QM programs, you can use bank statement and similar income. Rates today come in at 8.125 for a primary, final APR 8.278. And for our investors, same thing. HELOCs are rare for investors anyway for investment properties. So our fixed rate second mortgages can still get cash out for investors, an 80 LTV in this scenario. Rates as low as 9.75, final APR 10.243. So great option to get cash out for our investors. And again, these are non-QM, so can use bank statement and similar. Let me go ahead and get into today's topic, which is a unique version of our DSCR. So when we're doing our live rates, we can't really use different property types, but there are some very unique property types that are eligible for our investors looking for our DSCR loans, including our mixed use properties. So Jose, let's talk a little bit more about what these are and then check out some live examples.
Yes, this is a very exciting product. My recommendation to the MLOs out there listening, this is a niche that is not widely serviced, but is in high demand. We at the Mortgage Calculator do offer it. And this is a hybrid type of program. This is not your typical mixed use option that you're going to find via the typical commercial route. This is a mixed use product where at least 50% of the space is residential in nature. The other 50, no more than 50%, is commercial. And not just any type of commercial. It has to be like a clean type commercial, so no industrial manufacturing or anything like that. Typically retail, professional office would be two of the accepted uses. There are more uses in that, so do look out and ask us, and we'll provide you all the different uses. But due to the fact that this is not the typical commercial route, mixed use means that there's more opportunities here for the borrowers, because the first thing that's not going to happen is we're not going to ask you for the zip code to see what the population density is for the area. And if the population density is below a certain amount, automatically disqualify the property regardless of its merits, right? Like DSCR, credit score, and all that kind of stuff. The commercial conduit route, that's your first disqualifier. Low population density, undesirable demographics of whatever they may be looking for. They are able to do that in the commercial route. But since this is a more residential-based product, it is going to follow the same practices as all the other residential based products that we have, specifically the DSCR. Now, that does not mean that the guidelines for the 2 to 8 unit mixed use are going to be exactly the same as the 1 to 4 unit DSCR for residential properties, but the no zip code review is definitely the same, and that leads us to many more opportunities. Now, what will not be possible ever with this program is rural property. So if the property is designated rural on the appraisal, that is an immediate disqualification for it. Other than that, it's an amazing product, great rates that you're going to see now. I do throw out there, we do have the commercial based mixed use product that does go down to a 650 credit score, but that one is much higher rates than this product. You're going to love these rates, and you're going to see why we're so excited. So let me go ahead and share the options with you right now for our purchase and refi options. Our first option here is with the minimum 25% down payment. 75% LTV is the max, but you can see why we're so excited, because look at these rates, right? 9.624 is at par, and you can buy that down all the way to 7.999. The typical commercial mixed use options are probably 2 percentage points, 1 or 2 percentage points higher than that, with a higher cost to the borrower. So this is an amazing product here. This is at the max LTV of 75, and now this is lowering the LTV to 70. You do get more options, right? Now the rate drops, the par rate drops to 9.124 and 7.999, which is the lowest rate possible, but now that costs you 2.35 points instead of 3.35 points. So the borrower saves a substantial amount of money there at a little bit lower down payment. And now our minimum down payment option with this product is 660. Now with a 660 credit score, which is very low for this offering, for any DSCR type offering, you're looking at 35% down or a maximum 65% loan to value. Now, due to the lower loan to value, it does offset any substantial rate or cost increases. So we're looking at 9.749 at par, and we can buy that down all the way to 8.124. So I know there's a lot of investors out there that are looking at this right now and say, oh my God, 660 mixed use, only 35% down. That's a moneymaker. And now our cash out refinances for this program. 70% LTV is the maximum LTV at the top credit score tier. So we're looking at 9.499 costing at par, basically, right? So 70% LTV cash out refinance, par rate 9.499. And you can buy that down all the way to 7.999 at a cost of 3.225. And our last option here to share with you is the cash out refinance at the lowest acceptable credit score under this option, right? This hybrid mixed use DSCR option that we have. 660 is the minimum credit score, and 60% is the maximum LTV when you are doing the cash out refinance with that score. And again, due to the reduction in the LTV, due to the credit score, the rates are still excellent. 9.499 is at par, cost of 0. And you can buy that down again all the way to 7.999 at a cost of 3.225. So, and if your credit score is below 660, like I mentioned, we do have a 650 minimum credit score option, and in some cases we can get exceptions below 650. So do look to the mortgage calculator for all of your mixed use 2 to 8 units. We also do the 5 to 8 unit small multifamily under this same program, which is very, very popular because, again, no zip code review or worries about low population density. But as always, we do have to be concerned if the property is designated as rural on the appraisal.
All right. Thank you, Jose. Let's see here. I do not see any questions, surprisingly. But great products there. Yep, no questions coming in, so we'll go ahead and wrap it up. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different loan type. So we will be back tomorrow with a new loan topic to talk about. We appreciate everybody tuning in, and we'll see you tomorrow at 11 a.m. Eastern for the next episode of Daily Rates Live with the